Hello and welcome to the member update for 2022. Today we'll be updating you on what we've been working on over the past 12 months, but I'll also be talking to Andrew Howard, our Chief Investment Officer. Andrew will update on the year's performance, market conditions, and what he sees ahead. Firstly, I'd like to give you an update on what we've been working on during the last financial year. We have moved our insurance arrangements to MetLife, which we think will add great value to you as members. As a profit to member fund, it's important that we continue to deliver products and services that meet your needs. We'll always try and keep our administration fees as low as possible so that we're equipping you today so you're ready for tomorrow. Now I'd like to introduce you to Andrew Howard, our Chief Investment Officer. Andrew joined us 8 months ago, and since he joined us, it's certainly been a very busy period. Andrew, thanks for joining me today. Can you tell us a little bit about investment performance over the past 12 months and particularly what's been driving that investment performance?
Yeah, thanks, Scott. As many of our members may know, the last 12 months has been extremely challenging in terms of equities and bonds markets. We've seen substantial falls over that period, and it's actually been one of the toughest investment environments we've seen for quite some time. And to put that in context, we've actually seen the US S&P index have its worst start to the year for over 50 years. And US Treasuries, US 10-year Treasuries, which is bonds basically, they've had their worst start to the calendar year for over 100 years. So we're just living in quite extraordinary times at the moment. And really there's a number of key reasons for that. We've seen rising inflation, and on the back of this rising inflation, where we've seen record inflation both in the US and the UK, and of course in Australia we've seen inflation literally as we talk today at levels we haven't seen for many, many years. As a result of that, you've seen central banks around the world having to raise interest rates, and of course we've seen it here with the RBA raising rates quite materially over the course of the last few months. And it could well continue. I know we'll come to that a little bit later on. You've seen the really unfortunate situation of the outbreak of war in the Ukraine, and that just doesn't have any sight in terms of ending anytime soon. You've got global supply chain issues, a lot of that brought on by COVID, which of course is still with us today. We've seen severe lockdowns in China as well, which is impacting on the ability to really transport goods from China to around the world. So all of this just adds up to a situation where we've found it to be an extraordinarily difficult investment environment over the last 12 months.
So Andrew, with markets facing increased volatility and geopolitical risks, what does that mean for performance?
Scott, it's certainly been an environment that's impacted investors all around the world, and certainly members of Australian superannuation funds are certainly not immune to that. For instance, the Growth Plus and the Balanced Growth option for Catholic Super, MyLife, MySuper and Transport Super did deliver negative returns over the financial year. But I think it's really important to remember superannuation investments is all about the long term. And so when we look at the performance of the Growth Plus option over the last 10 years to 30 June 2022, it's delivered a return of 9.55% per annum. As well, the Balanced Growth option has delivered a return of 8% per annum over the last 10 years to the end of June 2022. These long-term results really are a function of our underlying investment strategy, and we have a really strong focus on diversification. And when I talk about diversification, it's diversification by asset class as well as diversification within asset class. So we're really well diversified in terms of the number of underlying investments we have within our members' portfolios. We also have a very strong focus on active management, as we believe that can certainly deliver attractive returns to our members over the long term. So it's really important when we think about what's just transpired over the last 12 months, where we've had a really volatile share market. This investment strategy is really designed about ensuring that our members' retirement savings are diversified and they're not as reliant on share market returns, particularly in these very volatile markets, to deliver their retirement outcome. And we certainly believe that our investment strategy can help our members maximise their retirement income over the long term.
Andrew, what important takeaways can you share with our members, and what do you think the year ahead shows for investment markets?
Scott, I think it's fair to say, look, we're not out of the woods yet. I mean, our expectation is that these challenging market environments that we've experienced will continue. And I think really some of the backdrop to that is that if we continue to see inflation at levels that we currently see it, it will require central banks like the Reserve Bank of Australia, the US Federal Reserve in America to continue to raise rates. And that is a real challenge for investments, particularly in share markets. We have the ongoing war in Ukraine, the global supply chain issues that I talked about, they're going to continue. COVID is still with us. And so all that means is it's likely to lead to an environment where investor sentiment remains extraordinarily uncertain, and caution, I think, will still be the likely driver of markets for the foreseeable future. But I think in an environment where we see all of these negative headlines, I think it's really important, certainly for our members to remember, in this sort of market environment, it's really important not to react to those headlines, because basically, Scott, what we find is that our members who remain invested through the good times and the bad times, and don't try to time markets, will end up in a better result over the long term. And we do need to remember superannuation is a long-term investment. And I'm pleased to say that most of our members do stay the course. They're not reacting to the short-term noise that we're currently seeing in markets. And importantly, this means that when markets do eventually turn, and they will at some point, these members will benefit from markets starting to rise again.
Andrew, thanks for taking the time to talk to us today about investments in 2022.
Pleasure.
If you'd like to discuss which of our investment options might be beneficial for your particular circumstances, then you can come and talk to one of our in-house financial advisors. The first appointment is complimentary, and you're under no obligation to proceed with the financial advice. Looking ahead, we've got plenty to do, and we're really excited about the projects we've got coming up. In the next 12 months, we're upgrading our digital services, we'll continue to look for operational efficiencies, and we'll continue to strive to be the profit-to-member fund that equips you for today so you're ready for tomorrow. Along the way, we'll continue to keep you updated on the initiatives that we're working on. If you have any questions about your superannuation, then please contact us. Thanks for being a member of the fund.